Good morning, everyone. Thank you for joining us today to learn about some innovative disruption that's going on in the VC landscape, in the global VC landscape. My name is Mor Asya. I'm founding partner and co-CEO together with Shelly at iAngels. For people who are joining us for the first time, in a word, iAngels is an investment firm that specializes in investing in Israeli high-tech startups, in early high-tech startups, where we have a very innovative model that complements a platform and a traditional VC. We just founded less than 5 years ago, about 5 years ago, and today one of the most active investors in the Israeli ecosystem, with over $150 million in AUM, invested in over 70 companies, and really one of the most collaborative VCs there are in the ecosystem. We collaborated with pretty much every fund out there. These days we're launching our first institutional fund called Ingenuity in collaboration with the European Investment Fund. And we're very excited to kick off today and share a little bit more about our research and observations of the Israeli high-tech ecosystem. Now, I wanted to really kick off the discussion. Let me see. Wonderful. With a very significant step that we're facing. In fact, we're facing the largest intergenerational wealth transfer in history, with over $30 trillion looking to exchange hands over the course of the next couple of decades. Essentially, we have millennials and exennials who are coming into their own wealth as up-and-coming investors, but also inheriting the estates of their baby boomer parents, thereby creating what I like to call a new kind of LP, or new LP, which is motivated by a different set of values of that of their parents. Actually, based on a JP Morgan research, over 86% of millennials are interested in sustainability technologies. They have a much more advanced sense of social and environmental responsibility. And they're also concerned with some traditional elements that we're familiar with from the VC industry and landscape, such as liquidity, transparency. Everybody's talking about how millennials are kind of falling out of love with the traditional banking system. So they really want to gain back control of how they manage their finances, and they want to be able to move money around with a click of a button. But that also chimes into real challenges that we're facing in the VC industry, such as liquidity, and how does one really achieve liquidity? Now, while VCs really need to try to think about how to cater to this new kind of investor, we also need to remember that this new generation is not only bringing a new kind of investor with different states of mind, but also a new entrepreneur. We have the younger generation of entrepreneurs who are trying to tackle new challenges in technology around innovative themes that are just now beginning to form. And if we take, for example, one of the sectors that we'll be covering today, the autonomous vehicle space, where Israel is quite at the forefront of the innovation curve. The autonomous vehicle is going to be another 2-3 years, and then we're going to see them roaming the streets. In the U.S., it's far more advanced. And specific cities have more mandate to introduce these cars, but Israel is definitely supporting a lot of the groundwork in terms of the technology. Now, for us to think about how we're going to have autonomous vehicles roaming the streets, it all seems like so monumental. We're living in this such an exciting time. But maybe, in hindsight, it's all going to be just a blimp on the innovation curve, and we're going to see, new innovative technologies paving way, such as maybe the flying car. 2 years ago, I was at a conference in St. Petersburg, and they were already showcasing, flying motorcycles and different new innovative means of transportation. So what does that really mean for new kind of companies that are going to emerge around those kinds of sectors and innovative ecosystems? What does it mean for repurposing the roads real estate? So what does that mean for real estate tech? What does that mean for different innovations that are forming around the autonomous vehicle space. So it's really even hard to imagine what's going to be the case in the next 5 years, and this is just an example. Now, children today, they grow up in a world where millennials are running the show. Millennials are founding and leading some of the most important and significant organizations in the world. If they're growing up in a surrounding where, the founders of Snapchat or Facebook were like 20-year-olds when they founded the most significant companies, they're looking at, in Israel specifically, at Adam Neumann, who founded WeWork and sold for $15 billion. He's I believe in 81 or 80. He was born in the year 80. Or people like Asaf Rappaport, who is the CEO of Microsoft Israel, who is a millennial who's riding his bike and bringing his dog to work and leading one of the most exciting innovations in Microsoft. So Israel has really put a lot of emphasis and a lot of thought into growing the next generation of entrepreneurs. Children today, they learn entrepreneurial skills in kindergarten. They learn about digitalization in school. They take additional classes like mindfulness, like my son at school in Savion, who actually received the country's award, number one place in digitalization. Takes different kinds of companies like project-based learning and mindfulness, a lot of different types of toolkits that are preparing them to be the innovators and the entrepreneurs of tomorrow. Now, if we're looking at this new type of entrepreneur, new type of creative thinking, new type of ambition to create billion-dollar companies and really shake up the global landscape, we need to make sure also that there's somebody on the VC front that knows how to see eye to eye with these entrepreneurs and understand what kind of values that they're coming from. Because in this day and age, the entrepreneurs really choose their partners for this journey. It's going to be a long and significant one. I mean, some VCs have actually took the time to think about concession plans, about how to bring younger partners on board that can talk the same language, that understand the kind of products and the kind of ecosystems that these entrepreneurs are looking to disrupt. Other VCs like Anderson Horowitz, they have a lot of additional services and additional features, like creating a next generation VC. Other VCs have a lot more to do in terms of adjusting to this new entrepreneurial landscape. Klein & Perkins have admitted to have missed on a wave of generation-defining startups because of internal focus and strategy. So as we can see, some have less and some have more to do in order to really make those adjustments and take part in investing in the innovators of tomorrow. One additional, this is actually a very interesting example of the research that we've done about the VCs, the global VCs who have hired a partner who is younger than 30 years old. Now here we have, some of the top funds. It's obviously not a fully comprised list, but it's just an example to show you what kind of reality do the VCs face today and how they're looking to create a partner base that is much more catered to the to the millennial entrepreneur. Now, another important element that's that's really shaping up the way that VCs are conducting themselves are the fact that maybe 10 or more years ago, it was really relatively simple to be investing in startups. There wasn't a lot of opportunity for different financial models or for financial offerings. Today, the landscape looks significantly different. If it's different types of platforms that are emerging, if it's different types of crowdfunding, reward-based, equity-based, if it's P2P lending, B2B platforms, different types of the evolution of the investment document from being traditional equity or debt to different forms of CLAs and safes and advanced equities and ICOs and different ways, different means to raise capital. And as a result, from the abundance of platforms and opportunity for entrepreneurs to actually raise capital, one has to realize that money is no longer king. It's not only that entrepreneurs can avoid altogether going on Sun Hill Drive and just hopping around from VC to the other. They have so much more opportunities today. They have such a vast variety to choose from. And as a result, the VCs really have to keep up with the ever-changing models for financing and also offer something more than just the ability to fundraise. In this part of the research, we actually looked at the new way to raise capital via ICOs that we saw a great deal of in 2017 and early 2018. Now, the red actually indicates the growth in funding via ICOs versus angel investing, which is remaining relatively constant. Now, one of my hypotheses were that while we see traditional angel investing, which is a key element of the ecosystem in supporting early stage entrepreneurs, consistently investing in the ecosystem, we see new investors who are looking for additional ways, additional diversification, and different means of avenues of investment, like the ICOs, in channeling their funds. So what would it mean in the next 10 years? Will traditional angel investing be replaced by the new innovative models? Here, why is this comparison interesting? Because people who are not familiar with the ICO model, ICO is the company is really going public, but it's the first, in many cases, the first funding round that the company really has. And so it really correlates with angel investing, where we need to make determination on investment before there's a fully baked product or a fully baked team, and many times it's really just the very first investment going into the company. So this is indeed very interesting. What's also very interesting is the fact that we have today not only VCs or professional investors investing in entrepreneurs, but we have entrepreneurs investing in entrepreneurs. Many companies have raised much more equity than they need to actually run their day-to-day operation, and they've already taken a key strategic decision to carve out a part of that capital towards investing or creating a nostro that is going to invest strategically in companies that are close to their field of operation. And this is just an example of some of these companies who are doing so, and it makes me think, well, people who have been around investment for so many years and have really vast experience in VC, in angel investing, et cetera. Today, you have entrepreneurs who are really becoming the next gen investors and are investing in entrepreneurs themselves, supporting the ecosystem and becoming an invaluable part of the ecosystem. Now, I want to say that some of these trends that we identified are really going to have a ripple effect that we're going to see come into play only in the next 10 years or more. The unicorns of today were identified by investors many years ago that people thought they might be crazy and missed out on the opportunity to invest in the Airbnbs and in the Ubers of today. So entrepreneurs who are looking into the future and are building the unicorns of the future need to be controversial, need to be disruptive. They don't really play it safe. But the investors who are able to kind of open up their mind and realize that will be able to take part in a very exciting VC global landscape and invest in the unicorns of tomorrow. I want to thank you again for joining us this morning, and I'm happy to introduce our MC to kind of take us through today's agenda. Thank you, guys.